Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vase, coming to you live from Toronto. I am here for the Futurist Conference. And once again, on this episode, I am being co-hosted by Sawcruhteez. Hey, welcome back to the show. I believe you were last on Friday.
How's it going, Tone? Yeah, I think that was the last time that I was on your channel. I certainly appreciate you having me back. We have some charts that will definitely be exciting to look at. Bitcoin has been looking like it's ready to make a big move over the last few days, maybe even week or so. And then we're seeing a little bit of action happening in the altcoin market. So I'm not sure if we'll be able to get to that, but I will be very excited to take a look at the charts that we're able to get to today.
All right, let's go over to screen share and just want to let people know we finally updated my calendar all the way through the end of, well, the middle of November. So right here, I am at Futurist. From there, I am off to Dallas. You can check out September. I will be at Baltic Honey Badger. Which is actually I thought I changed it. Hold on. You know what? I want to double check. Hold on. This will be really quick. Boom. And website loads faster now. Good job, guys. Here, and we're going straight to the next one. There it is. Baltic Honey Badger is on Saturday and Sunday. I'll also be speaking in Washington, D.C. at the Black Blockchain Summit at Howard University. You can just go ahead and pull down the tab. You can check out the website. I'm always looking for, oh, that didn't really work now, did it? Oh, I don't know why it went to the contact page. Should be just that. I hate these pop-ups. There we go. I will be speaking at Howard University at the Black Blockchain Summit. So go ahead and check that out. I'm sure it's hilarious. I might be, I have one of these actually. I've had it for a while. I've been waiting for a good time to wear it on stage. I really think later this week in Texas is the perfect time to go ahead and rock that one. It's going to be a lot of fun. All right, let's, yep, so that's it. You can check that out. Then I will be in other countries. No events going on yet that I know of. I just wanted to go. I'll be in Prague and a bunch more. Bulgaria, I think. Romania. Sorry, guys. Even I'm getting my flags confused. Romania, and then to the UK, and then to Bali. Anyway, and then Greece. So all of these conferences are being added, and then Portugal. I'll be speaking at Web Summit. So lots and lots going on, and the rest are going to come your way. Workshops, options is going to come up in 2 weeks. Dallas. All right, we'll get back to this later. All right, let's go to the charts.
So before diving into the charts, I got to say that that's one of my favorite shirts I've ever seen. And then I also wanted to ask, I didn't see Ugly Old Goat's Working Man's Bitcoin Cruise on there. Am I going to see you there?
Unfortunately, you won't. And that's because I am kind of stuck in Europe. I'm happy to do it remotely, but I believe the ugly old goat cruise is happening right here, and it's just difficult for me to go from Europe to California, then back to Europe, because I'm committed to Honey Badger and I'm committed to Prague. So like going to the US, and not just if it was East Coast, it may be something, but we're really talking like Western Europe here, and it's literally the other side of the world. So unfortunately, I can't make it. Then I got to go back to Europe. So it just makes it impossible for me to get there, unfortunately.
Well, hopefully you'll be able to remote on in.
Yep. Hey, anything you want to say about the monthly? I really don't. I think we've already covered it recently, and not really much to add.
Not a whole lot to add other than maybe keep an eye on that setup trend line. A close back below that area would definitely be significant. Outside of that, 5 getting back above the 4 would be significant as well. That's the only thing jumping out to me there.
All right, so weekly is where it's at. I already have the stop and reverse points on there. And I don't know if you caught my show yesterday with Joe Saz, but we mentioned it how you and, well, me and you are both neutral on this weekly scale. We're probably leaning slightly bullish because of Consensio and because we just closed at a new weekly high for the year. But for me, I really need the sequential to give me a green number above the prior green number on a price. And for you, you need to break the downward trending stop and reverse point. So for now, I think it's safe to say you and I are both leaning bullish, but there's no trade on this time frame as of yet. But if you have bullish positions, you might as well hold them.
Interesting. Yeah, that is something that I have to zoom in a little bit before suggesting what I am seeing on the more short-term basis. But in terms of a longer-term or medium-term sort of no trade zone, I'm completely in agreement with you there. I did see that you had a show with Joe yesterday. I haven't been able to catch it yet, but I will do my best to watch that here this afternoon. We were on this morning on Block TV. Looking at some charts really quickly, and definitely agree with you there, but we'll be interested to hear what Joe's thoughts are. And just while you have this chart pulled up, it's something that I've been thinking about quite a bit and wanting to get a little bit better of an explanation for you and your listeners, and that is in regards to the distance of the price as it relates to the stop and reverse point. And many times Tone has not been he hasn't been loving the stop and reverse points at certain areas due to how far away from the price it has been. And that is one of the things that I actually like most about this indicator, but I've had kind of trouble putting into words exactly why. And after a little bit more thought, I think I can help to illustrate that a little bit here. And that's looking at the bullish stop and reverse points that started back in March of 2019. So right back in there, the stop and reverse points flipped bullish, and notice how far below the price that new stop and reverse point got put. Once we broke the upsar, it moved all the way down. The price was at close to 4,000, and the stop and reverse point was down at 3,000, like almost 25–30% away from the price. That's very, very significant. And that could be too much risk for somebody to take on who is more of a shorter term swing trader. And I do consider myself a swing trader, but I do notice that oftentimes I'm holding on to positions for much longer than Tone, which means I can afford to take more risk when I first enter in, because the reward is potentially greater if I am expecting to hold on to it for longer. So to try to sum this up as quickly and briefly as possible, what I love about the stop and reverse points, specifically as it relates to using them for a stop loss, is how it gives the position room to develop when you first enter. It is very important when you first enter to give the position some room to develop. You want a stop loss that's going to ensure it doesn't move too far against you, but you also want one that isn't too tight such that you're going to get whipped in and out, in and out, in and out. And that is what I love about the stop and reverse system, in that it will start by giving the position a good amount of room to work, 25, even 30% sometimes. And then once the position moves in your favor, the reverse points will tighten up consistently and in a parabolic fashion, such that when you're in profit, you're not going to miss out on a whole lot of that unrealized profit before exiting the position. So hopefully that helps to illustrate why I'm such a proponent of these stop and reverse points, even when they are pretty far away from the price, because that does give us time to let a position develop, and it keeps us away from getting chopped in and out, in and out. For viewers, if you want to go back through time and just look look at how often weekly stop and reverse points are getting whipsawed, and it is very, very, very rare. And in my experience, almost every indicator gets whipsawed ferociously in Bitcoin. So when I find one that doesn't, I'm going to pay very, very close attention. So thanks for letting me go on a little spiel there.
Yeah, let me ask you something, because those are two very different things, right? Using stop and reverse points as a stop loss versus using stop and reverse points as an entry, right? Those are, while there are occasions where your stop loss flips your position from bullish to bearish or bearish to bullish. I have done this in the traditional markets myself when I was a very short-term trader in the futures market with S&P futures mostly. Now, I rarely use that element of trading. I very rarely have my stop loss at the same time as a short entry. The only time that really happens is when I'm trading after a 9, because I don't know if it's going to be a 1 to 4 candle reversal followed by continuation of trend. So I'm entering, if I see a good 9 to enter a trade, I'm entering it with the expectation that it's a 1 to 4 candle reversal. If it keeps going, I'm staying with the trend. If it reverses, then my stop loss usually is the same area as a trade in the same original direction, but only if it happens quickly. Like if it really does go through a 1 to 4 candle correction, it's very rare that at that point I'll just take my profit or keep going, right? So to me, the reason why the current stop and reverse points are, annoying for me personally is because they are not in the vicinity of the prior swing high for a breakout trade, when over here they were. Like this is where I would be very confident, and throughout like between 3,000 and 4,000, I'm happy to be patient and wait for the break of the SAR, because at that time it's also breaking the prior swing high, which is great. Unfortunately for me, it happened on the back end of sequential. If only this also happened on the front end of sequential, I would have been all over this. But this time around, we are like 1,000 points higher than we are now, and then we would be like way above where I would like to have my entry. So this is where, so this is the big difference. But to be honest with you, if I was trading with SARS, I would not have my stop loss that far down. My worst case scenario stop loss would have been the last swing low, which is in the vicinity of 3,500, which is in line with the 200-week moving average. And most likely, I would be a little more conservative than that and use the shorter moving average. That 25% is just way too much for my taste, even in Bitcoin.
Yeah, you bring up a number of great points, and I certainly see where you're coming from, and it's very valid what you're saying, and kind of goes to show that there are different strokes for different folks. Some things that work well for me will not work well for somebody else. Some things that Tone likes or doesn't like may or may not be something that somebody else likes or doesn't like, and that doesn't necessarily mean that it is valid or invalid. It just means that it works better with an individual's style. And the first thing that you brought up was the absolutely the thing that I have noticed that there could potentially be some room to be improved upon for this system. And that's the idea of trading it as a full stop and reversal system. That is how Wells Wilder designed it. And that is basically, if you're going to trade it by traditional rules, every time that a SAR gets broken, you're going to be covering a position and fully entering the other side. When trading the traditional stop and reverse rules, you will always be either long or short a market. And that is an area where I have noticed some potential rooms to improve in regards to potentially using another long-term trend identifier and only trading in line with that longer-term trend identifier, such that you are using the stop and reverse to signal an entry and identify a stop loss, but not fully flip the position unless it happens to also be occurring right when the longer term signal is flipping as well. So definitely a lot to be said about using this for stop losses and also using this for entries. However, I myself wouldn't necessarily use it as a full stop and reverse system. I definitely do want to be trading with the longer term trend. And then you touched on how back in March, the stop and reverse point was broken right as we were breaking through a horizontal boundary, and how that is what you want, that's what you want to see. And I completely agree, except for that we are essentially looking at slightly different horizontal boundaries. And the stop and reverse point will always start at the most extreme point of the prior trend. So when this most recent bullish SAR got broken on that red one right there in July, we broke the bullish parabolic SAR. So where does the bearish parabolic SAR start? It starts at the exact price of the high of that green 3. So that's where we start. In order for this thing to be broken, we have to break, if it was to be broken on the first SAR, it would have to break that highest high of that move, which to me is the most important boundary. And now, as the parabolic SAR continues to progress downwards, it should, what's best, what's most ideal is if it's allowed to continue downwards until it is in line with a horizontal boundary. Now, notice back in March, when we did break it and it was in line with that horizontal boundary, well, the SAR 3, 4, 5 weeks ago was nowhere close to that horizontal boundary. And if we were looking at it back when there was a green 2 and there was a green 1 that Tone is looking at buying there at the beginning of February, we've got the green 2 and it hasn't gotten above the green 1, but now he's maybe looking at the green 3. Well, I would be saying, look up at that SAR. I'm going to wait for that. And Tone's, how he likes to approach it, it's not right or wrong, just how he likes to approach it is that, man, that's too far away. I want to be getting in here as soon as we break this horizontal of the 2 and the 1. That's where I want to be entering. So it doesn't necessarily mean that I'm right or that he's wrong, but just want to point out that it would be ideal if over the next 4 weeks, these SARs continue to accelerate downwards and potentially line up with a horizontal boundary that you are seeing with the TD or just a Fibonacci or something else.
Yep. All right. Very good. Let's move on to the daily chart. So the daily chart topped on a 9. It wasn't easy to trade it because it fell hard on that 9, rebounded strong, and then had a consolidation day, and then it fell, making the low yesterday. And while I was expecting today to be a little bit more bullish than it currently is, because the 1 to 4 candle correction has played out, we are now officially on candle number 4 with only 4 hours to go. So I'm not really expecting it to drop big time. So this is where the TD sequential is at a make or break level. If tomorrow we get a down day challenging the low of the swing, which is the low end of 1100s, the TD tells me that this is a very critical 9 top, and there is a higher probability that we're going to go all the way down to a 9 at the low. Now, ideally, this 9 at the low will stay above the setup trend and make a higher high, but anything can happen. But if tomorrow's candle starts to show significant strength and we start to approach the top of this 9, that tells me that this is not a 9 that's likely to reverse the market, that tells me that this is the type of 9 that's going to enter the countdown phase and is going to go higher than these highs. So tomorrow's candle is very, very critical for me, whether it's at the low end of 11,000 or at the high end of 11,000.
Absolutely. Absolutely. And there's one other thing you mentioned that I just wanted to touch on, in that how you mentioned how you like to trade the TD as sometimes a full reversal on that 9, and how you will do that expecting for a 1 to 4 candle correction, but also being fully prepared to hold on to it for a full 9 count. That's something that is very, very, very important, in that most people, when they enter that position, they are expecting the full 9 count back to the downside, and they're almost always losing money if it's only a 1 to 4 candle correction, because they've got big hopes for this position. And it is very, very, very important to be expecting the most conservative option, but also to be prepared for a more ideal sort of scenario. And I also do just really like the idea that when you get to a 9, there are 3 things that you're expecting to happen: a 1 to 4 candle correction, a full 9 to the other direction, or just a straight continuation. Well, if you've got 2 to 3 that you can bet on, and 2 out of those 3 situations you're going to make money, and only 1 you're not, that's the type of idea that I really, really like. So just looking at these candles here, this is again an area where Tone and I disagreed, but it's not necessarily one of us is right or wrong. It's just how we personally like to trade, and in our experience, when we see something, this is what we are viewing. So whenever we disagree, it's mostly to just have a good conversation, and it's not at all to be trying to be right or wrong about anything. But that 9 candle, I was viewing that as a hanging man, and the hanging man candle is one that I really like in terms of, when it comes after an uptrend, I do expect that to signal reversal. And the reason why I like the hanging man candles so much is because the risk reward, not necessarily the strike rate. So potentially 50% of those candles could get blown out to the upside, or maybe even more. Tone thinks that that's a bullish candle. Maybe 60% of those continue to the upside. That doesn't really bother me because of what we're seeing right here. Sometimes they will go ahead and reverse right off of that. And when that happens, the risk reward is just incredible. And how I would trade that is essentially, as soon as the price breaks below the body of the 9, below where that 9 opened, that is the signal to go ahead and enter. For me, this is how I would trade it, that you wouldn't need a close below this area. You could basically set like a stop order. As soon as the price went below that area, you're entered. And that is exactly right where Tone put the stop. You can put the stop loss right above that wick. And if you put the stop loss right above the wick of a hanging man, generally the risk will be very, very, very minimal. And in this case, if we are only expecting a 1 to 4 candle correction, we can still expect something in the order of 10 to 1. I mean, something close to that is not unrealistic when you're looking at a stop loss that small. And here's the thing, is when you're looking at a stop loss that is that close to the price, that means that you're going to expect it to get wiped out a lot, just and that won't matter, because of the times that it doesn't, you're going to be able to potentially capitalize on a big risk reward. And another way that you could, instead of entering fully when the price breaks below that body, you could look to enter partially after breaking down the low of that candle. Breaking down the low of that wick could be an area to also add to a position. But as it stands, this is playing out beautifully, and would be looking at a 50% retracement of that red 1 as the stop loss. If I did take this as a short, I would look at a 50% retracement of that big extended range candle, would be putting my stop there, and would be hoping that it continues down. If it doesn't, I'd be happy that I made a little bit of money.
So you might have been stopped out at the top.
It might have. It might have.
Yep. I would have done the same. I actually would have lowered it. Basically, again, for me, it's a 1 to 4 candle correction, with this moving average being critical. So at some point before the end of this day, assuming that we opened here, traded down early in the day and then started to trade up, I've probably taken the exit somewhere in the middle of this green candle, because now I am anticipating that the 1, 2, 4 candle correction is over, but I am not yet ready to go long. Now, if this happened the day after, if this type of candle was happening today, and it actually did go down to the moving average, and then it started to rally hard, I would be a lot more interested to immediately flipping the short into a long. But on this candle happening a little bit early and not necessarily reaching any critical point of support, I would now wait for a green 1 and then a green 2 going above it.
I like that a lot. And you touched on something else that's very important, and that is how the candle comes together in real time. That's something to me that is absolutely crucial. And Tone touched on it right there, in the sense that, look at that red 1. That's a big extended range candle, a bearish Marubozu that is going to be scaring a lot of people who are actively trading. This is a big candle that it closed below the 7, it closed below the 8, at least where those were opening and closing. That's a big move that a lot of people would be expecting continuation after a move like that. And disciplined traders that are trading the TD sequential, what are they going to do? They're going to wait for the red 2 to fall below the red 1 before entering. And this right here that we're seeing, this kind of 2 or 3 candle pattern, is something that I see time and time and time again, in the sense that what happened here is that right after that 1 closed, there was people in the market that were selling. They were expecting follow through. They were kind of afraid. There were sell signals from the TD. As soon as those sell signals came through, the market immediately reversed back to the upside and closed a green candle on that following day. So anybody who was entering shorts when the red 2 went below the red 1, now their mettle is being tested. We're going to see, is this a strong hand or a weaker hand? A lot of people are just going to straight up get out of that position right after that close. They entered on the green 2 below, excuse me, the red 2 below the red 1, and then it immediately reversed. They got freaked out. Maybe they used too much leverage, whatever the case may be. Now they're already out. And then the market continues to move in that direction. So getting sort of a 1 candle counter trend move early on, right after an entry was signaled, is something that I pay very, very close attention to. And I really like how Tone was interpreting that.
Yeah, thanks for that. And yeah, you're right. I didn't even realize it, right? Normally, you guys hear me say all the time, it's a short trade when a red 2 goes below a red 1. But not in this case, because in this case, by breaking setup trend and going straight up, and considering the overall structure, I'm more bullish than bearish. Like, the bearish case needs to prove it to me. So the only way I would even be in this short position is if I'm short right off the 9. To me, this is not a good time to go short, even though 80% of the time, I would tell you to go short on a red 2 below a red 1. This is not one of those times. This is where you're looking to take profit from a short because of everything that came before this occurred.
Absolutely. Absolutely. And that is, I'll say time and time again, the best traders are the ones that know which entries to pass on. There's going to be 20 to maybe 30 or 40% of entries that for one reason or another just should be avoided. On the parabolic SAR, I'm not always stopping and reversing. I'm looking for reasons to only take one side of the position. And what Tone said there is that 80% of the time he is going to be taking these signals. But that's what is very important for viewers, is to pay attention to the 20% of the time. Anybody out there can do the 80%. A green 2 goes above a green 1, so you click buy. It's the easiest thing in the world. But that 20% is what literally can turn a system into a huge winner or basically break even, or maybe a small winner. So the best traders are the ones that know which entries to pass on. And that's what's most important for viewers to pay attention to, is when somebody like Tone is passing on selling a red 2 below a red 1. And what's most important there is why. why is he passing on that? And here it is, from what I can tell, being above the setup trend line, and also the moving averages recently getting a bullish crossover, having just blown right through that, now kind of pulling back to test those areas for support. This is absolutely not an area that I would be interested in shorting either. And that's just something that I think is very important for people, is to not pay attention to what entries are being taken. Pay attention to what entries are not being taken. Because if you can figure that out, then the entries that you will want to take will become very obvious.
Yeah. And there's precedent for this occurring. Look at the last time we had a 9. Granted, it wasn't great. The high came in on a 6. But after the 9, what did we get? A 1 to 4 candle correction, and with a beautiful, strong reversal off a moving average and setup trend line. And this happened pretty much, like, I would be way more interested in buying this candle than I was this one because of the strength of this candle. And it's the same thing. I would not necessarily, like, to me, it's still a 9. There's still a likelihood of a 1 to 4 candle correction. I'm not rushing into short this red 2 below the red 1. The short should have happened earlier. Sometimes you're a little late to the trade, and either you can still do it, but you have to make that trade significantly smaller in position size than you normally would, or you were short from the 9 and you're adding to your trade here.
Yep.
So same thing, like if I am going to enter a short on this red 2 below red 1, which in this case I would not, it would have to be a very small size. The opposite is true in this case. I was only looking for 1 to 4 candle correction into this death cross and moving average, and setup trend line, and looking for significant downside. So I would have been looking to take my profit off the long at first chance of weakness, but weakness never came.
Yep, you're absolutely right. And I'm just realizing that I was incorrect with your moving averages. I was thinking that was a bullish crossover we just got. So my apologies on the.
Oh, I'm sorry. It is. Oh, no. That's a bearish.
I think you're
one.
right. Yeah, you're right.
Something. That is a.
That's a bearish crossover.
That's a bearish crossover. No, that's also my bad. That's because my moving averages aren't in the right order. This is the daily chart.
Okay.
I'm not sure what happened here. This, if it's a daily chart, that should be 20, and that should be. Oh, what happened here? I don't know. No, these moving averages are not correct, actually. That's not what I normally use. I normally use 50, 128, and 200. That's what I normally use on daily charts. So there was no moving average crossover. But whatever the hell I was using before was looking really good right here.
Yeah, sure enough. That was kind of making me gulp, like, oh my gosh, what did I miss? Okay,
I wasn't supposed to use those, but I can go back to them. It was, I think it was the 30 and the 50, but it's good enough. There was a moving average here and setup trend. But it looked nice. That wasn't on purpose. I have no idea where those moving averages came from.
Yeah, that's interesting. But yeah, I definitely am agreeing with your analysis, and that is what is most important is knowing when to stay out and not expose yourself to something that it looks like it's moving in your favor, but really the move already happened. And Tone does an incredible job of analyzing that using the TD sequential.
All right, not much going on a 12-hour chart. Don't really want to spend time on it. The 4-hour chart is your expertise. There's, for me, these are pretty strong wicks. And while to me right now, Bitcoin is truly 50-50 on whether we're going to go up and break out of this channel or go and challenge the bottom of the channel, I have absolutely no conviction one way or the other by looking at this short-term chart. But if I was a 4-hour, if I was a trader of the 4-hour chart, I will have a green 2 going above a green 1 next candle. And unless this candle runs away with it all the way to the upside, and even then there would be a breakout. So I have no other than a green 2 going above a green 1 giving me a buying opportunity. And I will add that, yes, I would have seen this most recent red 2 going below the red 1 as a shorting opportunity, and that trade would already be stopped out. So now we flip it over, and if there is a green 2 going above a green 1, that's a buying opportunity. Now, that did not happen here. That did not happen here. That did not happen anywhere since, right? So the 4-hour chart, and these are kind of break even, right? So the 4-hour chart has not given you many signals using sequential. And by other metrics, I have this channel. If we go lower than these swing lows, I am then pretty bearish. But right now, it's 50-50. It can go either way for me.
Interesting. So yeah, when we talked earlier about the short-term movement, this 4-hour chart is telling me that one way is a little bit more likely than the other. So I could go ahead and share a chart if you don't mind. All right. So yeah, the higher time frames are pretty much 50-50, but for me, the lower time frames are showing a higher likelihood of pulling back. So this was an arrow that I had drawn a couple days ago and posted that on Twitter. So that is what I'm expecting, and we can go through here why. First area that is kind of jumping out at me is how we have broken down horizontal support, and we appear to be turning that into resistance, or at least we're trying to, right in here. This area at 11,524 was support back in here for that sort of symmetrical triangle. And then it did break down on this candle here. And since then, we notice that support has moved down. It took out this low here. We are getting wicks, but I do expect this area to hold as resistance at around 11,525. And looking at the ADX, it is showing us something that is very important. So what we see, first of all, is the negative DI crossing above the plus DI. So this was showing a bull trend as long as the green line was above the red line. And then when the red line moves above the green line, that does indicate a bear trend, but it has to be confirmed with the ADX above 20. And look what happened here. It pulls all the way back to 21 and it rolls up right after the DI crosses. So this is very, very important to me right here, seeing that the ADX is ready to continue a trend, or at least it's ready to trend opposed to just range. And if that is the case, the DIs are showing us that the bearish direction is the most likely. So I'm going to go ahead and throw on the SAR. This will be the area on the 4-hour chart that I would be watching. As long as we are below these parabolic SARs on the 4-hour chart, I would be expecting a continuation to the downside, which if that happens, the next area of support that I have outlined is going to be based on this horizontal right here at 88.30, and that's also about where this trend line of the bottom of the parallel channel would be coming in. So as long as 11,525 is holding, I'm expecting a pullback down to below 9,000 as the most likely. I'd give it about 60% chance. The higher time frames are still pretty neutral one way or the other.
All right. We can stay with your charts if you want to show anything else. Otherwise, we can move on to like gold. I think we're done with Bitcoin here.
Just one other chart to show really quickly, and that's that I think there could be a potential selling opportunity on the ETH Bitcoin pair. So let's see what we've got here. I want to show just how well these SARs work when the trend is really moving, but also to show how trading it as a full reverse may leave some to be desired. So breaking down the bullish SAR could be our sell signal. And then breaking through the up SAR is just basically telling us to stay on the sidelines, take profit, no trade zone, wait for confirmation, opposed to trading it as a full stop and reverse. So notice how well these sell signals have worked. We've got a sell signal here, 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 up in here and here. So about 1 out of those 5 trades there lost money. And then this one made a good amount of money. If you took this one at 0.021, it only had one small little reversal. You got right back in, you wrote it down here. So this just illustrates exactly what I like to see and how I like to trade in terms of we enter, we've got room for this position to develop in case one of these crazy wicks happens. I want my position to be protected. Notice all of these wicks fail. Finally, we get one gets up there, breaks out. So be it. We get right back in, and then we come down here, we break this. So here we are covering and re-entering at a worse price, but that is absolutely okay. It's maybe even more than okay. It's actually to be desired. We want to hold on to a trend as long as it's moving in our favor. And then once it shows a significant sign of getting ready to go back to the other direction, we want to get out of that exposure. We're not wanting to enter long, but we're wanting to take all of this profit. And then once it breaks down again.
Wait a minute. Well, Sawcruhteez, that one was actually really good because if you look, you're not getting out, unlike the candle in early August, where unfortunately you got out at the very peak at the price, which is where the SAR would have been. On this one, the SAR would have been probably in the middle of that body. So you're not getting out at the wick. So you're getting out at a, at a much more reasonable price.
Absolutely. You're absolutely right. The reason why this might be better is because you're also re-entering in very close to where you got out. So say we got out at 0.0209, we would also be getting right back in at 0.0205. So essentially, we didn't really miss out on anything. Whereas here, we didn't necessarily have to sell or buy the exact top. The only thing is that we did get in at a little bit worse. So here we would have got out 0.0196, wouldn't have got back into 0.0191. So still, I mean, this is just working beautifully. This is a perfect example of when we're getting out, we're protecting ourselves from when the market is in a position where it could move against us, but we're ready to get right back in at a very, very similar price. So we're basically looking to cover after we found some support and then re-entering as soon as that support broke down. Notice how this was right in line with the support breakdown. So what are we seeing right here? We had another great trade here, came all the way down, broke through it here, and now we've actually got an opportunity to potentially enter in at a better price than what the exit would have been. So this would be the ideal sort of situation where you're getting out and then you're getting a counter trend move, and then you're potentially in a position to get back in at a better price. So this was just one that I wanted to show. We also have the 50 EMA acting as resistance. It should be right above here. And then if this SAR does get broken down, that would be a good opportunity to sell this bounce. In bull markets, we're looking to buy dips. This is absolutely a bear market, and this is absolutely a bounce that I think would be a opportunity to sell. So that's all that I've got on crypto.
All right, I'll take over screen share. I'll pull up the Litecoin chart. So let me go back to screen share. And this is still Bitcoin. Hey, before I head over, now that we have over 1,000 viewers again, hey guys, check out the calendar. I've added all of my events. This is what my September looks like. I will be in Washington, D.C. for the Black Blockchain Summit, then off to Europe for Honey Badger, traveling around Europe, then Prague, then Romania, the UK, the event in Bali, and then Singapore, and then Greece, and after Greece, Portugal. You can check all that out. workshops. I'll be doing one in Dallas this Friday, and then the equity options 2-day webinar happening over the weekend. If you've attended my webinars and workshops before, you do get a discount at registration. And as for conferences, the financial summit going on in Bali, where Sawcruhteez, myself, Ugly Old Goat, Leah, Van Zen, Willy Woo, and probably a few other traders are getting together to just, hang out, enjoy a vacation, bounce ideas off each other. And you can join us for this vacation, but it's not cheap. So please read all of this over, but you do get a lot of stuff at this high-end resort, including a daily massage, which is something I will be looking forward to. All right, guys. Also, the registration for Unconfiscatable is going to start later this month. All right, let's look at my Ethereum chart. And my Ethereum chart on a daily has bounced off of a combo 13. I wish sequential 13 would have came, but I've been waiting for alts to bounce because on a weekly scale, Ethereum did have a 9, not the strongest of 9 candles, but still has that wick. I mean, I'm respecting these 9s on most of these shit coins, whether it's Ethereum and even Litecoin. Litecoin weekly is on a 9 right now. Now, this is not the kind of 9 I'm expecting to reverse the market to new all-time highs. This is the kind of 9 I'm only looking for a 1 to 4 candle correction. And once this thing resumes its downside and breaks this horizontal support line, Litecoin might be over, like over. Like all of these anonymous trolls with Litecoin Twitter handles will have to find another shitcoin to promote over. So we'll see what happens there. This looks really, really bad for Bcash in that it had a 9. The correction did not last at all. And now next week, if you get a red 2 going below a red 1, going below these lows, it gets very, very ugly very, very quickly. So that's another example of Bcash. Hey, yeah, Sawcruhteez, so on yesterday's show with, we did a lot of interesting stuff, a lot of interesting things on yesterday's show with Joe. And we talked a lot about fundamentals of the market and also the total market cap, where I think there was some good analysis that could still be done. Whoa, wow, where is that Fibonacci coming from? Not sure exactly why it was all the way over there.
Probably the candlestick.
Maybe, but this is the daily, so the daily would not have gone that far. So we mostly talked about, obviously, when you compare the Bitcoin dominance, which is itself is on a 9 in need of a pullback, the Bitcoin dominance right here this year has been like the altcoins got destroyed. I mean, granted, in 2018, Bitcoin and altcoins were both going down. And it's just that altcoins were going down faster. Yep. Oh, I see what's going on here. I have to rename this. Hold on. Rename. Bitcoin MCAP. Okay, this solves my problem. And I continue on this chart. Okay. And but 2019 is different. The 2019 Bitcoin has been rising, but altcoins have really not been rising all that much. And what's curious to me is Bitcoin dominance could go back to 90%, but total market cap could still be like 33 or 40% off the high. Because the next time total market cap breaks new highs, I'm expecting that to be mostly Bitcoin. So the price of Bitcoin would need to be like $40,000 or more in order to break this. And that may not happen for years and years to come. So to me, the dynamic between the total market cap and Bitcoin dominance is actually pretty interesting.
To me, it is extremely interesting. And throughout this year, I've been saying that this is the single most important chart as it relates to the Bitcoin price movement. I fully believe that this is what has been driving price discovery, is the swings and the ebbs and flows between Bitcoin market cap dominance. And I completely agree with you in terms of that Bitcoin could gain back 90% of its dominance, but still be below prior all-time highs. So quick question for you. What would you prefer? Bitcoin market cap dominance above 90%, price of Bitcoin below $10,000, or Bitcoin market cap dominance below 80% and the price of Bitcoin above $40,000?
I would prefer the first option. I would prefer the price of Bitcoin below, but okay, so here's my concern. The first scenario is actually very dangerous, because if the price of Bitcoin is below 10,000, as Bitcoin is breaking 90% dominance, that means that the last shitcoiner has sold and mass adoption ain't coming. And what that means is a potential 80% correction for the price of Bitcoin. So the first scenario is very, very dangerous. Now that I think about it, I would honestly prefer the second scenario better. The Bitcoin dominance at 80% and the price of Bitcoin at $40,000, because that means that if that's the top, first of all, that means that another wave of noobs has showed up, and the 80% correction is still coming, but I'd rather take it from the $40,000 area than from the $10,000 area.
Great answer. I appreciate that. And this chart is very, very interesting to me. I didn't realize this chart was on a weekly 9, or is that only a daily 9 for the dominance?
This is the daily 9 for the dominance that showed up a little while ago.
Good. A weekly 9 would have definitely worried me in terms of the positions that I have. So I might as well just double check.
No, I'm sorry. This is not Bitcoin dominance. This is the total market cap.
Okay. So I do have Bitcoin market cap dominance, and it is also on a weekly 9. I guess I can go ahead and pull that up real quick if you don't mind. Or if you want to, just BTC.D.
1 second. I'm not sure. I want to make sure I don't lose my charts. MCAP Bitcoin. I'm going to save this as a new chart so I can just close the other chart. I thought I would solve my problem by renaming the chart, but okay. This is the weekly. Okay. That certainly didn't work. All right, I'm gonna play around with these later. Something kind of failed here for me.
Well, let me take over the screen share real quick.
Actually, no, I got it. And now if I rename this, it should work. Okay, sorry about that. Right, so Bitcoin dominance is on a weekly 9. I'm not sure what it is on the daily. It hit a 9 recently, but not at the peak, just a day or two earlier. And the total market cap is on a daily 9 with a weekly, ooh, there was a 9 right at the peak. And now we've started a new uptrend. But I'd still like to see us break this area. All right, I can hand it back over to you unless you want to look at gold.
I'll just do a real brief thing on the dominance, and we'll definitely enjoy looking at gold afterwards. Okay, so I'm looking at the Bitcoin BTC.D, which will be the market cap dominance, currently testing the 70% threshold, which is a prior horizontal that we can see it resisted back in August, and now we are on a 9, which when I see that, I'm always going to refer to my ADX to see if this looks like it's most likely ready.
Look at the last, sorry, man, I gotta interrupt. Look at the last, oh, not the last, there was one in between, right? But look at all of those arrows. I mean, the 9 buy was perfect. The prior 9 sell was perfect. The sequential 13 was even pretty good, right? You know, to the right of that. The only 9 in this whole mess that did not, you know, immediately do something was that one. So that was like 1 out of how many? 1, 2, 3, 4, 5, 6. 1 out of 6 was a failure.
Yep.
Those are amazing odds. Not to mention the 13s bunched up 3 in a row and then were reversed.
Absolutely. And what's even to add to that is how the 1-9 that didn't play out occurred in conflict when it was breaking through a weekly parabolic SAR. So that is something that is very, very interesting to me, that all of them worked out except for the one that happened on a parabolic SAR reversal. So that is fascinating to me.
And even the prior one worked out too, that big red candle that broke the parabolic SAR. Yep, right there. And it worked out for like that day or two. It certainly wasn't a great trade because you can see how it was broken to the upside the following week, but certainly a trade that didn't lose you any money, which is probably more important than anything else in trading.
100%. That is crucial. If you can figure out how to trade without losing money, then you're going to make all the money in the world eventually.
It's kind of like boxing. Like, look at Floyd Mayweather. Like the reason why he's undefeated is because he doesn't get hit.
100%. I mean, there's just so many analogies, and that's what I love so much about how these markets work. So similar to so many other things in life. Same thing with poker. The best poker players are the ones that know when to fold the most. They're not the ones that are, you know, always making these big fancy moves. And this is definitely a good example of that principle. So just going back through. So basically this did jump out at me, and I was unaware of this before today's show. So I am glad that we have looked at this, because what was I just talking about? That was looking at shorting the bounce of ETH BTC. And this chart is telling me that that is absolutely not a trade that I should be taking. Why is that? Because we're on a 9 at resistance. And if we were to get a 1 to 4 candle correction or a full 9 count to the other side, what does that mean? That almost certainly means that ETH is going to be gaining value against Bitcoin. So that is something that this is a very important thing to consider. If you are shorting altcoins, seeing this 9 tells me that we could be in for a 1 to 4 week correction to the downside, which could see a big move happen in alts going to the upside. So whenever I do see a 9, that is when I want to refer to my ADX to see if it is something that is really at a point of exhaustion based on the average directional index, or if it is still early on in the trend. So whenever we see the ADX below 40, even below 50, that is a good indicator that we are in a strong trend and not an exhausted trend. So notice again here, this 9 that we continued to the upside. Notice how low the ADX was down in here. So that's what I would be looking at on this 9. I'd be seeing that we broke this parabolic SAR and we're just now turning up on the ADX. So I would be hopefully thinking that there's a good chance of that to continue to the upside based on these Wells Wilder indicators. Right now, we are getting a bit of a different picture in terms of we have a 9 with the ADX as high as it's basically ever been. The only time it got this high was back on this enormous enormous move back in here. So when the ADX does break through 50, gets up to 60 or 70, that's when I want to watch like a hawk for the next 9 coming in, and to pay very close attention to that, much more so than any other 9 that happens to appear. So this is something that is very important to me and indicates that we could be getting a relief rally in the altcoin markets. We did see that many altcoins are at horizontal areas of support, so that kind of would make sense. Watch for 71.75 to get taken out. If that gets taken out, then I would view this horizontal as done, and I would expect more continuation to the upside. As it stands right now, it looks primed for a 1 to 4 candle correction.
Hey, Sawcruhteez, can you throw the topics curve on there? I'm really curious.
Ooh, that is interesting. I don't think I've ever used the Copic on this chart, but it could be a very good tool for something that trends this heavily. So let's take a look at, wow, this thing broke through 0 back in here. So yep, right in here, it was telling us that a trend is starting. Topped out right here. Look at how that topped out right where that did amazing. And then we consolidated while this was able to cool off. It finds support. It briefly peaks below 0, finds support and comes back up. This is interesting. I would be interpreting this to see more upside. Let me make this a little bigger. Seeing that this consolidated while the Copic pulled back and then turned up and broke back through 0. This tells me that there's plenty of room for more upside, but for some reason, this has started to roll over. As we've continued to move to the upside, you would expect this to continue trending up, but it hasn't. It started to roll over, and that is very, very interesting. Because of that, I think that would confirm my read of the TD and the ADX. What are you seeing there, Tone?
Not my expertise, but what happened was on my drive from Pennsylvania yesterday, I finally watched your Tyler's webinar on ADX and the Copic curve. So now I'm looking to look more into it. It's just not something I've ever used, and if it wasn't for Tyler, I would have never paid attention to it. So I'm very, very new to it. I'm literally just watched that webinar, and it was very, very good.
I'm glad to hear it. Those are still available for anybody that is interested, and just want to show that how powerful this thing can be. Let me try to get a bit of a cleaner chart in terms of finding long-term reversals, and look at how this thing stayed below 0 throughout the entire bear market of Bitcoin. This whole time from February 2018 all the way until March 2019, the Copic curve was below 0. And then as soon, and it really tried right at 6K, everybody, a lot of people, not myself or Tone, but a lot of people thought 6K was the bottom, and there were a lot of reasons to think that. And the Copic got super close to signaling a bottom there, but it didn't. It turned back down before crossing. And then once it did finally cross that 0 threshold, look at how it did it right before that big move happened, right in line with that SAR breakthrough. So this is absolutely a great tool for long-term trends.
Well, and I'm finding it very interesting right now because we just made a new weekly high, but the topic is down big time from where it peaked a few weeks ago.
And that is what blows my mind about the Copic and what I love about it so much. And that is the one thing that I try to pay attention to is when the price moves against the Copic curve. That can potentially be a very strong signal. So not only having it cross 0 as the buy, but seeing it roll over, that is a potential sell signal. And it is just fascinating how right here it rolls over right near the top, again, almost exactly in confluence with the parabolic SAR breakdown. And then the price rebounds and continues back to the upside while the Copic continues moving down. So that is potentially a big signal. If the Copic's moving down and the price is moving up, I view that as a sell signal. If the price is moving down and the Copic is moving up, I view that as a buy signal. So this is definitely a very important indicator right here to be paying attention to, one that I have not looked at over the last couple of weeks. So I appreciate you bringing that up.
Yeah, and if you go back to February of 2018, like that was a pretty big move from 6,000 all the way to 12,000. It was 100% rise in Bitcoin, and the Copic didn't even like budge, like not even a millimeter.
And that is what's so powerful about this thing. And I've looked into how it's calculated, and I've tried to figure out how it could possibly do this. And I don't really understand how it can do this. It's based on month-long moving averages that are very, very long-term that I don't know how this happens, but when it happens, it is super powerful. So great catch there, where we see price moving up and the Copic not even flinching. It just continuing straight downwards. And then, and that's right here. This would be the most confusing time. Right here, or maybe right here, where we're in this huge bull market. Everybody's kind of waiting to buy a dip. It's not coming. Finally, it comes, and you don't know, is it going to continue a bull market, or was maybe this the bottom? I mean, this was the hardest time for Bitcoin by far. And the Copic had no problem telling you that this is a huge sell signal right here. And then let's also look back in here, where it finally starts to roll over right in here. And then as the price bounces, another big bounce. I mean, from 10,690 all the way to 17,000. And what happens during there is the Copic rolls over. And as the price is bouncing right here, we have the Copic turning down. Price up, Copic down, sell signal, same here. And that is potentially exactly what we're seeing here. So very, very interesting.
All right, let me grab screen share back. Those were very good to look at.
And
all right, let's have
one thing to touch on before sending it over is the Copic curve is generally on like all markets. It's best used for the monthly and is almost irrelevant on any other time frame as far as I can tell. But in crypto, it's best on the weekly from my experience, just due to how long it's open and how fast it moves.
We have gold continues to rally higher. We broke 1,500, went all the way to 1,530. Wow. And looks like there's no stopping it. It is moving in an exponential fashion. It's going to pull back, but I mean, I'm not running to the gold store to sell my coins yet. But if we have a 9 around the 62% Fibonacci, and I happen to be around the gold store, I may be liquidating some of that gold.
Not me. I am going to be holding on for new all-time highs myself. Maybe take a little bit of profit around 1,600. I can't imagine that I will. I just definitely am seeing a huge amount of upside that is possible. That the risk reward of holding through 1,600 and holding through new all-time highs, to me, is absolutely the best bet. That's what I was planning on originally. So I'm very excited about this chart, and I could certainly see some resistance along the way, some stutter steps here and there. But for me, this is much more of a position trade. I have spot that it's, you know, not very easy to move in and out, and I'm going to be definitely holding on as long as this is showing signs of a medium or long-term bull market.
All right, so not much to add, really. I can glance at the daily chart just to see if there's any 9s coming up. Oh, there was on Friday. And I think it's been completely ignored. If tomorrow is a nice up day, then here comes another 13 to the upside.
Absolutely. I love that in terms of if we get a green 2 above a green 1 tomorrow, we're also on, was it a green 3 on the weekly above a green 2, I believe.
Got plenty of room to the upside here.
Having both of those timeframes line up is a great sort of confirmation in terms of, I would agree that I think that 9 will get ignored since the weekly is only on a 3.
The stock market is pulling back a little bit. I'm not concerned yet, but if we start to approach the bottom end of these two candles, the stock market gets into serious trouble.
Yeah, it's something that I'm not overly concerned just yet, but I am definitely very much not liking that this candle fully retraced that green one. It looked like we were getting a strong bounce that created a higher low that I was very much wanting to see us go ahead and create new all-time highs. And now seeing this action on this candle today retrace all the way back down to the open of that one is quite ugly to me. And I would agree that if we are unable to support above 28.25, then it could get ugly. And the reason why I would be worried is that move recently did break down the weekly parabolic SAR, which is very, very important to me. So that would lead me to think that taking out 28.25 is most likely, but there's just been so much strength in the stock market that I'm not at all confident one way or the other. This is very much a sit and wait, no trade zone for me, and we'll be watching closely because that could change in the blink of an eye.
Cool, thanks for all that. Knowledge Sawcruhteez. Now here's the weekly chart, let it update. The weekly chart, again, like it could get ugly, but I'm not overly concerned yet. But let's just say on a day like today, like sometime in the middle of the day, I would be looking for stocks that are topping on nines, not necessarily stocks that are bottoming on nines or 13s, right? So on a day like today, I'm trying to hedge my bet. There's lots of stocks out there that are at TD9 buys, but I would be looking for TD13 sells. There's not many. I think there was one really good looking one that we notified in the alerts. I just want to pull that up, and because most of them were on 9 buys, but I think there was one that was on a 9 sell. Oh, so new ones came in while I was flying. Like here's an example, right? Like the markets are a little bit shaky. That's the weekly picture. This is the daily picture. Now, when you find a stock like this was from the notifications. You know, it's pretty much gone straight up. Now you look at the history of the stock and you're like, well, the last time it had a 9, that was a beautiful correction that helped set up trend that went higher. And we just had an aggressive 13, so the sequential is probably coming soon. It had other 9s that got you into profitable trades very, very quickly. And you're dealing with a very weak and fragile market. So this is the kind of 9 you want to kind of short. I don't know, Edison International, I have no idea what they do, but it's on a weekly 9. You know, you just got to check the daily and see what's going on. Maybe I should just pull up the tickers. And there was one more, I think, that was interesting. This one, not so much, because I commented on another one. Yeah, here's one. I actually want to see how it ended the day. So this wasn't a notification. Equinix, again, never heard of it. Daily chart. Look at the history. Here's a 9 buy, beautiful. Here's a 9 sell, beautiful. Another 9 sell. This is a 9 buy that did not work out. So you had 1, 2, 3 successes, 1 failure, still a good ratio. And here we go with this gorgeous reversal candle. Again, another stock at all-time highs, 570 bucks. Plenty of room to the downside here. At least a correction back to the prior swing high.
That is an excellent chart, and you brought up another really good point that I wanted to just elaborate on a little, and that is how you use the higher time frames or potentially the broader indices to try to determine how you want to set up a trade that is maybe on an individual equity, and that is something that is very, very, very important. And it's these little things that Tone will bring up, or maybe myself, but much much more so other people with more experience, that these little things that will very, very much go a very, very, very long way, and they're very easy to overlook. And that's just the idea that if you're doing the same thing that everybody else is doing, you're not going to be making any money. No matter how profitable the TD sequential is, if all you're doing is just trading the basic, most set in stone rules, like a lot of other people are, well, you're probably going to just be breaking even at best, is my opinion. Whereas these little sort of tidbits, that these tweaks that you can implement to set yourself apart from everybody else, is all that is needed. Just some very small little things to set yourself apart from everybody else that is using the same tools and the same indicators to trade what you are trading. And this was a great example here where the stock market is looking in a very shaky spot. And I am determining that as, for me, a no trade zone. I want to wait and see what happens. Whereas Tone looks at it and he says that I am interested in 9 sells based on what we're seeing from the S&P, opposed to 9 buys. Now, somebody else who's out there not considering anything from the broader perspective, they're not, Tone would have an edge on them by his ability to look at the stock market, interpret how it looks from a broader perspective, and then only take positions that are in line with what he is seeing on the broader index. Just that little thing right there could add a tremendous amount of return to a system that a lot of people are trying to make work for themselves. So anything that you can find to just give yourself a little bit of an edge over other people that are trading the TD is going to behoove you exponentially in the long run. And that was another great example from Tone, using the S&P to decide that he is not interested in taking buy signals from stocks necessarily today, but he would be interested in the sell signals.
Thanks for that. And we're looking at Lyft and Uber. Both of them. Uber is at a new IPO low. That makes me very interested. And this is happening on a price flip. So it's not interesting enough for me to buy Uber, but it certainly makes me interested in potentially buying Uber if it plummets down into a 9 buy in the mid $20 range.
Do you not think of it as a selling opportunity for breaking down the lowest low of this chart?
I don't think so. I think it's too unpredictable. Maybe if this candle was significantly smaller and tomorrow's candle was a red 2 breaking below the red 1, breaking below this consolidation. But because I missed this monster down day, which is like a 10% down, $4 on a $40 stock as of Friday, I'm not going to want to take a chance. It's too risky for me at this point, right? Like, since if I missed the short off of this red 2, like this red 2 going below this red 1 was a lot cleaner of a short. Or if this was a consolidated zone, then I would be interested in a nicely timed trade. But it's too risky for me to short it. I just have to wait and try to time the buy. Now, Lyft, on the other hand, Lyft was a little bit cleaner, but still not great. This is the daily chart of Lyft. See here, today, Lyft is breaking the prior swing low with a red 2 going below a red 1 after, guess what? A 1, 2, 3, 4 candle bounce to the upside off the 9 that could not break setup trend. And this would have been, let's just say if I was live trading today and I was paying, see, just because you're live trading doesn't mean you're paying attention to 3,000 stocks, right? So if I was live trading markets and I was paying attention to both Uber and Lyft, I would have shorted Lyft as the red 2 is breaking below the red 1 and not Uber, even though Uber would have made me more money. Does that make sense?
Absolutely. And this definitely does look like a pretty interesting shorting opportunity to me as well. This chart looks like it's following Uber, just maybe a little bit behind in terms of that green 2 that had a gap up. It looked like it opened all the way at the top, since it's a over just a couple candles back from the current action. Since that is a full-bodied, excuse me, like if we're just looking at the current 3 candle kind of setup just today and in the last couple days.
Right. So Uber is doing what Lyft did to me back in May. Let's ignore earnings, right? I mean, I would never trade with earnings or anything like that other than option spreads. But let's assume this wasn't an earnings day, right? This is what Uber did, right? It's this price flip candle that breaks prior support and is not enough for me to enter the short. And this candle is so severe that, like, look at what happened next. Yes, it went lower, but then it reversed in the middle of nowhere. This is what I want to avoid. I was really praying for Lyft to get me a buying opportunity on a 9 in the low 40s, and it never came. So I never had a long play on Lyft, and I missed out this entire rally. Now, the only trade that I had on Lyft was shorting it off the 9, which would have worked out nicely. Buying off of this 9 would have frustrated me, and here's why. I'm not sure I would have taken the buy, and if I'd taken the buy, it really depends how this candle played out. If I had taken the buy on the 9 candle, I would have been stopped out. If I had taken the buy on the 1 candle or 2 candle, then it would have been a successful trade. So, but I don't know what I would have done, right? I probably would have jumped the gun early and bought on this 9 and got stopped out. And then I probably would have been too chicken shit to get back in. But now there was a shorting opportunity earlier today. I was on the airplane. So if we did the show earlier or at market open, I would have talked about it. But Uber is doing something that's not useful to me in my trading style, in that it broke down. That's a shorting opportunity. But if only this was a red 1 and this was a red 2, that would have been beautiful. I want to line up my call signals, because if you're not trading with a plan and structure and prior success, you're going to fail.
Yep, then that's what we are here to try to help those who are looking for a plan and have maybe experienced a little bit of failure in the past. If you could pull up that Lyft chart one more time, there's just one thing that I found interesting, which makes me think it could be a good opportunity. So that green 2 that was just a couple candles ago, since that is a full-bodied green candle, that means it opened all the way at the top of that candle.
Yes.
So it gapped up from like 60 to like 67 or so overnight. I'm not sure how in the world that happened, but it did. And then look at
honestly, I think the earnings, it's possible that TradingView has the earnings on the wrong day.
That's what I was thinking.
And the reason why this happened is, I heard what happened here. They reported great earnings, but then they announced something kind of stupid on the earnings call. They announced that they're gonna they're changing the date for early investors in Lyft to sell their shares, and they're moving it up by a couple of months. And that date's coming soon. That date's coming like next week, I think, right? So that was very stupid of them. So basically, the professional traders, well, wait a minute. Now the pre-IPO people, the pre-ICO people, sorry, like to equate it to the crypto market, right? Like that's when it hits the kind of like the exchange where all the early investors get to dump on the retail, and that's why it tanked.
That is definitely interesting. I didn't realize that, but the one thing that jumped out at me there is that selling volume bar that occurred on that green 2. And this could be a important thing for viewers to pay attention, is that if you're looking at the green 2 above the green 1, that it gapped up and it's back above the moving averages potentially, and then you see this big red selling volume bar, understanding that that green 2 above the green 1 is all based off of selling volume, is extremely important to understand. So when we gapped all the way up there, we had a huge spike in selling volume, and now the price has continued to follow through off of that. So seeing a big spike in selling volume off of a weird little bounce like that is very important to me. And now that we have the red 2 below the red 1, what I would be doing is I wouldn't be taking that trade just yet. Instead, I would be waiting for that red line that Tone has drawn to break. Once the price broke below that, if that were to occur, I would be interested in taking that short, basically expecting it to kind of follow Uber in that Uber's created new lows for the year, and being confident in that it's still up here close to the horizontal and coming off of a big selling volume bar. So those last 3 candles are definitely quite interesting.
All right, we do have to wrap this up. I mean, I don't really know which stocks are interesting and which aren't. Oh, this becomes an interesting short tomorrow on a red 2 below a red 1 below all the moving averages, breaking down some serious consolidations. This is Tesla, guys. As much as I love Tesla and Elon Musk, I need to trade the chart.
Could we take a look at the weekly just to see a bit of a zoomed out? Because that is very vulnerable. Look at those moving averages getting ready to cross. It's like pretty much a bounce up and into a death cross, except it got a quick reaction before the death cross came in, is how I would interpret that. Huge resistance at 250. Yeah, that is a very good selling opportunity if you ask me.
Right, now this was a different kind of red 2 going below a red 1. You got to be real careful with the day after earnings, after such a big drop. It's due for a bounce. This setup trend line can only support the price for so long. So I think Tesla is in a very vulnerable position here going into tomorrow. Microsoft is still doing fine. And Amazon is doing better than Tesla is, but yeah, I mean, it's leaning bearish to me if it weakens tomorrow. But Tesla is the trade. Apple's still holding in there. AMD is hanging in there nicely. And here's another one, right? Same thing. Same exact chart. You can potentially have a red 2 going below a red 1, breaking prior support. This could be bad for NVIDIA.
Certainly enough. That is interesting.
Yeah, so I would be putting these 2 on my watch list if the market is weak tomorrow and the S&P starts to, challenge the swing lows and potentially for a bigger corrections. Yeah, some of the trades I'm looking for are 9s at the high, if they were happening now, or things like this, things that had a little bit of a bounce off of a 9 and is now entering their countdown phases while kicking off setup phases at the same time. Though earnings is coming, so I wouldn't do it. Only because of earnings, unfortunately. Or use options, which I'm going to be teaching in a couple of weeks.
So something jumping out at me is that Roku. It's up almost 9% while everything is down big. I wonder what's going on there.
Oh, wow. Roku is really taking over. That's the daily chart. No weakness there. The weekly is on a sequential 13, but there's another 13 in the background from this 9. Look, it's not, oh, beautiful 913 at the high here. And then here, damn. I'd wait a few more weeks, Look, Roku can only buck the trend for so long. I mean, if you're holding it, I'd still hold it. Like, the chart of Roku looks bullish as hell, but it's gonna pull back, right? Does it have 5 more days in it? We'll find out.
How about that gap in the weekly open? Is that something that you would think is going to get filled?
No, that's earnings, and it's already ran away with it, right? It could get filled, but only in a weak overall market. But as a stock, I mean, I'm not too concerned about that gap anytime soon. Roku's doing something right.
That's for darn sure.
GoPro should, you know, take notes. Yeah, I was kind of bullish on GoPro off of these lows. I'm not anymore because, again, tomorrow, potential red 2 going below red 1, below the swing lows. And I would never short a $4 stock, even if it was possible. But whatever hopes I had for GoPro, they're gone now. Nope, one more. Again, this one's even worse. This is a $3 stock for Fitbit. Whatever hopes I had for Fitbit, though I didn't have many, I don't think Fitbit is going to succeed. Oof. Yeah, see, I missed the trade on this one. I would see if a red 2 goes below red 1 tomorrow, that's just way too overextended. I'd rather stay away. All right, I think you guys get the point. Again, overextended candle and earnings is coming. All right, I think it's good to leave it here. Once again, guys, hey, check out the Financial Summit going on in Bali, 19th to 25th, where a bunch of traders, including Sawcruhteez and myself and several others, are going to get together, bounce ideas, talk about future plans, have a nice vacation, and you can join us at this amazing resort. Check it out. All the details are there. You can get to it from tonevase.com. You can also check out my travel schedule. It's all filled out, upcoming workshops, educational section, store if you want to buy t-shirts, affiliate codes if you want to support, doing a lot of stuff. And on this episode, I was joined by Sawcruhteez. You can find him on Twitter and soon his own YouTube channel.
That is right. I'm in the process of starting a channel this week. Hopefully we'll have it up and going sooner rather than later. So yeah, definitely keep an eye out on Twitter. I will be keeping you guys updated there. And in the meantime, I will be more than happy to continue making some guest appearances on different shows. And I certainly appreciate Tone having me on today. I think that went great. And we'll look forward to catching up with you soon.
Awesome. Thanks again. And I am here in Toronto. I'll be here for the Futurist Conference and then off to Texas on Thursday. Thanks, guys. I might see some of you around tonight and see you all on the next one.